Here are 3 news stories from the world of the cryptocurrency industry. First news. Why Bitcoin can't reach a new all-time high. Yuri Timur, director of global macro at Fidelity Investments, discussed the recent slowdown in Bitcoin adoption, which might have been the main obstacle preventing BTC from reaching a new all-time high. According to Timur, the price of Bitcoin is primarily determined by the growth of the BTC network. However, recently there has been a gap between the two indicators, he wrote on X. The growth of the Bitcoin ecosystem is determined by the scarcity of the asset, monetary and fiscal policies, as well as market sentiment. Despite the significant increase in cryptocurrency quotes recently, network development has slowed down. This dynamic has created a gap that explains the recent slowdown in the adoption of the token. Timur clearly showed how the growth curves of Bitcoin and Ethereum replicate the path of many technological developments throughout history. The BTC network, represented by the number of addresses with a non-zero balance, follows a certain growth trajectory. The price fluctuates around it. The analyst noted that such cycles of ups and downs are characteristic of the leading cryptocurrency. In my opinion, this divergence between price and adoption can explain why Bitcoin has slowed down a bit on its way to potential new all-time highs. The pendulum can only swing in one direction. For new highs to continue, network development must accelerate again, Timur wrote. Experienced and well-known crypto trader Peter Brandt responded to Timur's conclusions. According to him, with each bull market cycle, the increase in Bitcoin's value becomes smaller. This can be interpreted as exponential damping. If this trend continues, the next growth cycles will be less significant, Brandt emphasized. This makes sense given the asymptotic nature of the power curve and the pricing path to a mature asset, Timur responded to the trader's suggestion. Ki-Young Ju, founder and CEO of the blockchain analytics platform CryptoQuant, also had some ideas. In response to Timur's post, he pointed out that the Bitcoin velocity recently hit a low since 2013. According to Ju, the indicator will peak when BTC starts to be widely used as a legal means of payment for goods and services. The CryptoQuant CEO noted that Bitcoin was originally conceived as an electronic means for fast money transfers from card to card. However, over time, the asset has turned into digital gold. Many institutions now hold tokens without using them. Such significant changes in use mean that traditional BTC adoption metrics might have lost their relevance. With the growth of storage wallets like ETFs, funds are mostly concentrated in a few wallets. For an accurate assessment of the adoption curve, it may be more effective to separate cohorts for transactions with Bitcoin as payments or use op_code to measure application usage, Ju added. Recently, institutional interest in Bitcoin investments has been steadily growing. The Canadian fintech company DeFi Technologies recently adopted BTC as a reserve asset. Initially, the firm acquired 110 BTC. Earlier, the investment company Metaplanet, known as the Japanese MicroStrategy, took a similar step. On June 11, it increased its Bitcoin holdings to 141.07 BTC, purchasing an additional 23.35 BTC. According to CoinGecko, the top cryptocurrency by market capitalization is currently trading below $66,500. This is 9% lower than the ATH, which the asset renewed in March this year amid multi-million-dollar inflows into spot Bitcoin ETFs and ahead of the halving. In the last 24 hours, BTC's value has dropped by 1.2%. Second news. Approximate launch dates for Ethereum ETF. The chairman of the U.S. Securities and Exchange Commission, SEC, Gary Gensler, has announced the approximate timeline for the approval of S-1 filings for Ethereum ETF. According to Gensler, spot ETFs for Ethereum will be launched sometime by the end of this summer. The SEC chairman gave this forecast during hearings in the U.S. Senate Appropriations Committee. On May 23, the SEC unexpectedly approved applications for the launch of spot Ethereum ETFs. However, trading has not yet begun. For this to happen, the regulator also needs to sign the registration statements from the issuing companies on Form S-1. In recent weeks, experts have been speculating about the timing of the start of trading for the new instrument. In the best-case scenario, according to Bloomberg analysts, the registration process should have been completed in June, in the worst case, in a few months. The question of the launch of spot Ethereum ETF trading was raised by U.S. Senator Bill Hagerty. In response, Gary Gensler seemed to confirm the worst-case scenario. He noted that everything is going smoothly, and the listing will happen this summer. Most likely, it will occur in August. The approval of spot Ethereum ETFs was a significant step for the crypto industry. Even Michael Saylor, the founder of MicroStrategy, who does not recognize any cryptocurrencies other than Bitcoin, called the approval of the instrument a victory for the industry. According to analysts, the new funds will attract significant investments. For example, Bobby Bonzai predicts that monthly inflows into spot Ethereum ETFs will be around $569 million. Meanwhile, senior ETF analyst at Bloomberg, Eric Balchunas, believes that spot Ethereum ETFs could attract up to 20% of the funds currently invested in Bitcoin-based funds. However, JP Morgan analysts warn that capital inflows might be lower than expected due to the lack of staking income from ETH. Experts are also optimistic about ETH's growth potential. Asset management company VanEck predicts that the price of the second-largest cryptocurrency by market capitalization will break $22,000 by 2030. Haggerty also criticized the SEC's approach to regulating the crypto industry. The senator emphasized that the agency's roadblocks are pushing American crypto companies to move abroad. You are not prioritizing the development of rules for areas that desperately need them. Here, I am talking about creating a constructive set of rules of the road for the cryptocurrency industry. This is an innovative sector. This is a sector in which the United States should be a leader, he noted during the hearings. According to him, other countries are increasingly establishing clear rules for the crypto market. Meanwhile, U.S. regulators are hindering the industry and not allowing it to develop. According to a recent report by the cryptocurrency exchange Coinbase, the share of American crypto companies has decreased to 26% over the past 5 years. Third news. Wall Street financial institutions must be held accountable for mining. Bitcoin mining has evolved from a hobby for individual enthusiasts into a developed commercial industry dominated by large publicly traded companies managing large-scale mining complexes. 20 public mining companies produce as much carbon dioxide emissions as 2 coal-fired power plants in a year, over 7.8 million metric tons of CO2. Annually, the highest CO2 emissions are produced by Marathon Digital, Hut 8, Bitfarms, Riot Platforms, and Core Scientific. Each of these companies consumes as much electricity as a small town, says a Greenpeace report. Greenpeace experts believe that Wall Street banks and asset management companies, such as MassMutual, M&T Bank, BlackRock, or Vanguard, hypocritically include environmental goals and sustainability in their agendas but invest in and finance the cryptocurrency mining industry. Greenpeace activists are convinced that large financial corporations and small miners should be held jointly responsible for carbon dioxide emissions. The development of the industry would be impossible without capital support and the creation of economic incentives leading to the preservation of environmental threats.